Hi guys, welcome to honeystocks.com weekend analysis for the 14th of March 2020. I think really where to start off this week, I think most of you are used to me being a little bit more upbeat, a little bit more positive, and obviously providing the insight to the market that you guys all enjoy. Now, before I get into the charts this week, I understand more than most just what distress in the market looks like. I know many of you are looking at 401ks. 401ks are plummeting. Obviously, personal accounts are plummeting, margin calls, etc. I understand all this. I think the one thing that I want to really try and highlight this week is that things aren't always as bad as what they might seem. And obviously, I'm known for the technical analysis side of things, but as somebody that is a total student of the game, I have access to some of the best financial minds on the planet. I have access to insight that can help you move forward as well. And I'm going to try and impart some of that insight this week. I'm not an economics guy. I'll be the first to kind of hold the hands up there and say that I'm not an economics guy, but I do have access to economics individuals that know much more than I, and they're more smart than I am. And if I can give something from this that helps you, gives you peace of mind, etc., then hopefully that will help you in some way. I'm going to dive into the charts. But anybody out there that is struggling at the moment, anybody that's bag holding positions, please understand that I don't have a bias in either direction of the market. I call it as I see it. And those of you that obviously watched the analysis from 3 weeks ago, where obviously I was highlighting and I published my client only analysis for social media, I don't remember a time where I've had so many emails and thank you messages, and I know that many of you have saved many accounts on the back of that, and it is something that obviously I'm really happy about. But to the other side of it, and I'm going to be completely open and transparent with everybody today. I think once I get through my charts, I'm going to be sharing with you some of the successes and some of the areas that I think that can be learned from. I don't want to paint this great picture that 100% of my clients and 100% of my subscribers got defensive ahead of time. That's not what I'm here to do. I want to present to you guys exactly how it is, how exactly my group have performed and what they've done and what the percentages are. And I don't know anybody that offers the level of openness about a trading community, about performance as much as I put out there. I'm very open about my work, and I think it's very important. So for those of you that have been on the fence about maybe joining our growing community, our subscriber group, etc., stick around, because I'm going to be sharing the actual numbers with you. But rather than me obviously ramble on, let's get into the charts. And I apologize in advance for anybody if this causes any distress to anybody, if I'm making any bearish calls in the market. Again, it's not intended to add to elevated stress levels. I need to call it as I see it, and hopefully you guys appreciate it. So let's get into the charts. So I think where we probably need to start is to just address what we're actually dealing with. I haven't seen it play out in the media yet. I don't see anybody calling it an actual crash yet. So let me be the first. I think what we have to accept is that the market has plummeted 26-27% in a couple of weeks. I think we have to call it the market crash of 2020. So that puts a certain spin on our analysis, but please, as always, please pause the video, make sure you're comfortable with that before moving forward. Just basically says that this is just information purposes only, and everything you choose to do is completely on you. If you're new to my work, I am registered with the CMT Association, and technical analysis is kind of what I'm known for all over the world. And feel free to go and check out our various social medias. But if you do enjoy this, please do subscribe to our channel. Bottom right hand corner, as always, there should be a little subscribe button. So I think where we need to kind of kick off with the actual charts this week, and yes, I'm going to get into the overall market, what we can perhaps look to expect. And as always, I'm going to be going over quite a few of the individual stocks that I think you can obviously look towards over the coming 7 days. But I got a lot of questions and emails this week about gold in particular. Why is gold declining? Gold's a defensive safe haven asset, and whilst all of the above are completely correct, what we need to understand is in times of market stress, things like gold, Bitcoin, etc., they all become a source of capital. So if you're in the equities market and you are being crushed by margin calls, etc., it stands to reason that you're going to start to pull money out of other areas. You're going to be going to cash, acting on emotion, etc. So for everyone wondering why gold has been going down while the stock market is going down, I think all we're seeing is panic buying, and when we panic selling. And when we look back to history, back to the crash of 2008, again, this absolutely held true as well, because in the aftermath of 2008, gold actually declined 26% before it went on a monster 80% rally. So that's something that we can look towards. And I think what that really tells me is that the smart money knows to wait. So what you really should be looking to do with gold, I think, and I don't see a reason why this thesis wouldn't play out, is just wait for the shakeout to happen. Gold will find a support level, and then I think you can then look to act on gold. I think what we need to understand also, I think, just let me take this up to present day, and this is the level that I would expect gold to generate a bit of buying. I think what we have to understand, and this is something that I highlighted to our subscribers and clients a couple of weeks ago about potential divergence, and obviously that's held true, and we've had a massive decline. So this divergence should really be the signal to tighten up stop losses and looking to exit a gold position. But I think what we can look to do is just wait for a support level. I think this seems like a logical support level at the moment, and I'm sure if we do have a further decline in the equities market, the smart money will move into gold, and I think that's a level that I think a lot of people should be watching. Now let's get into the S&P 500. Now I think a few of you that follow me on social media have probably picked up on this chart, and I think it's very, very clear that whenever we have these big declines in the market, that this level is a big level of interest. Now, as we have entered into a bear market, I think obviously we have a 20% drop, so I can say that we've entered a bear market. We have to understand that with a bear market, that it works exactly the same as an uptrend, where we get a breakout to the upside followed by a retest, and then the overall market moves up again. Downtrends work exactly the same, so I'm watching this level with a lot of interest. We've had a breakdown. Are we retesting before we fall away again and we go down and test these December 18 lows? I think one of the questions, or I think two of the questions I think we need to ask ourselves at the moment is, certainly with the impact of the coronavirus on the overall economy, is that going to be a good thing or a bad thing for the economy? And question two is, if it's a bad thing for the economy, what impact will that have likely on the stock market? Now, the logical conclusion, certainly in the short term, over the longer term, I absolutely see the market rebounding, moving to new highs, because that's what the stock market does. But I think when you understand that the market can drop a lot further than you perhaps expect, that's when you really should be paying attention to technical levels, because whether you believe in them or not, they do actually work. And I'm watching this level here. We've had a breakdown below the May 2019 low, and I'm just waiting to see if we retest or if we break out to the upside here. My bias at the moment is, I think, probably down at the moment, but certainly it's something that requires patience. I know a lot of you are trying to call the bottom, etc. It's a very dangerous game in my opinion, and hopefully that's apparent from some of the charts. Tech has held up okay. I think that's a strong area of the market. I'm going to be going over some tech stocks, but I think with many areas of the market, the path of least resistance is actually down, and I see things getting a lot worse before they get better. TLT does look like we've obviously had a massive decline here. This is a breakout level that many of our subscribers and clients got in on, made a lot of money on this move, but we have had a massive breakdown here with the treasury bond ETFs. And again, I think what we're kind of seeing is just a move to cash, and it's affecting all areas of the market. The smart money will start to step in. I'm pretty sure very soon as we've got a market direction fully established. Now, it makes 100% sense to me that airlines are going to move into further free fall. I think certainly today in Europe there was a lot of press made because the flights that were moving into Spain were turned around mid-air and forced to fly back to their respective countries because Spain closed their borders. We can see the same thing happening in Ireland. I'm pretty sure it's going to happen in the UK soon as well. Obviously the US are closing off their borders. So that's not great news for airlines, guys. I understand the value plays here, but I think when you understand and you look certainly to maybe companies like American Airlines after 2008 were trading at $2. So don't fall into this trap about perceived discounts, because stocks can and will drop much further than you think is possible. Yes, massive companies, reputable companies. I don't know what the balance sheets look like, but I think what you have to understand is that with this situation, there are just some industries that are going to die a death. I will never consider a cruise, for example. So, airlines, there are going to be some airlines that make it through okay, and they're going to move through on the other side, but there are going to be other areas, airlines that don't make it, unfortunately. Just the same as the banks in 2008, there are going to be casualties within the travel sector, and I absolutely think that any strength that we get in the airlines, I think you can look to probably short that area of the market. Again, apologies for anybody that's out there and holding these stocks. Again, I'm not trying to push anybody in any direction. I've just got to call the technicals as I see it. Same with someone like Starbucks. Obviously, we're having huge issues with movement around the various cities, etc. Retail companies, Starbucks. I love Starbucks. Starbucks has been incredible over the last few years. Huge strength to the upside. I love Starbucks as a company. I love the stock. But again, it's one of those in the short term that I think is going to suffer. So I think any strength that we get in Starbucks, I think provided we're both below this level at $75, I think you do need to be bearish on Starbucks at the moment. Quite a few of you reached out to me last week after my sort of bearish call on Roku. Again, I think the chart kind of makes sense. I'm not here to say to anybody that I called that one correctly, because it could have went either way. We have obviously got a massive breakdown. So again, we know with downtrends, oversold conditions are characteristics of downtrends, not uptrends. So I think Roku, I think if we understand that, I think with the correction back in 2018, the stock dropped, I think, to $27 from a high of 90, if memory serves me correctly. So Roku is one of those that falls out of fashion very, very quickly. And I think what we're seeing here, I mean, it's got a high there of 175. We're already down at 80. So yeah, I think any strong move to the upside, I think it can be met with a short. Happy to be proven incorrect if we break above this level, but again, calling it as I see it. Obviously, the banks have taken a massive hit recently. Goldman Sachs has been a massive short for one or two of our guys, our subscribers, and profit target met. So I think what it is now, it's really just a waiting game with Goldman Sachs. I think it has found support. So if you're out there and you're in Goldman Sachs at the moment, we have hit the levels that we've seen obviously from back in 2018. So this is a massive level of interest now. And I think if we take the view that banks are going to get hit a bit more, then I think shorting it below $150 makes a lot of sense. But at the end of the day, it is Goldman Sachs, obviously one of the biggest investment banks in the world, solid company. The decline sorry, excuse me, the decline is there for all to see. So it's really just a case of just waiting to see, what this does from here. Does it break to the upside? Would I be buying Goldman Sachs? Probably. As a long-term investment, I think it makes a lot of sense. But as a trade, it's kind of in the middle of no man's land at the moment, and I think below $150 it makes a lot of sense. Amazon obviously found support this week. I'm sure there's many of you out there that are happy about that. I think online shopping is going to obviously be a massive thing. Whether or not Amazon have the employee numbers to fulfill everything, and that's going to be the big question, I think. And I think you can still remain bullish above 1700. This is a stock that actually a couple of our subscribers bought this week on this support level. It's obviously moved to the upside. But again, it depends if you're taking the trading approach or the long-term investing approach. But Amazon has found support, so that's good news for those of you out there. Apple as well looks like it's found a bit of support here at the 200 period moving average. Massive company. Love the company, love the products as well. So I think you can still remain bullish on Apple with current holdings. Would I be buying in? I think they've just announced this weekend that they're closing all stores. That's going to be a big problem come Monday. So yeah, if you maybe just bought in this one, you might want to think about de-risking positions, etc. But I think if you're above the 200 period moving average, I think you can continue to be bullish. But I suspect Monday, Tuesday, there's a huge problem there for Apple. And if there's a huge problem for Apple, there's going to be a huge problem for the overall market, in my opinion, as well. Netflix is obviously going to be massive for many, I think, that are under self-imposed quarantines and I suppose the removal of a social life. So Netflix, I think we've obviously met logical resistance here. We're trading sideways at the moment. Maybe for you guys that have been in there and holding Netflix for quite some time, I think this is a level that you might want to just kind of pay attention to. And again, bearish calls. I'm not ready to make a bearish outright call on Netflix, but I think if we break below that level, then that's a level that kind of makes a lot of sense to me. CDNS, very similar looking chart. We've had a breakdown. Obviously, let's call it the presidential rally on Friday. That last 25 minutes of the trading session was incredible to watch from a price driven perspective. And I think what we need to understand is that we're going to see a lot of that. I think the thing, and I don't have any political affiliation with the US whatsoever. Obviously, I'm 100% Scottish, so I honestly couldn't care about who runs the country in the US. But I think the one thing I do understand is that Trump prides himself on the performance of the stock market. The self-serving interest is almost admirable at this point, because it helps us to kind of see through the crap that he talks a lot of the time. And when I was watching that on Friday, I was kind of just watching it and watching the price action. And as the price is going up, my whole body was shaking, because I know what's going on. It's a pump and dump. It's a total pump and dump, in my opinion. And what it's designed to do is to suck everybody in late on a Friday. Everybody thinks the market bottoms in, and then oomph, on a Monday morning when the market opens, huge gap down, everybody trapped. Somebody somewhere is making money, and it's not the retail trader, unless you are smart about these things. So yeah, don't, you need to wait, I think, for a lot of these buys to come to you. Don't go chasing things. You want the volatility to drop a little bit. You want to have a clear direction in the market. And that's just me trying to impart a little bit of wisdom. But let's see Monday. I could be completely wrong. EHTH has obviously held up very, very well in the face of obviously what we've seen. It's in a bit of a consolidation triangle pattern at the moment. So until we get a break of either direction, I am very, very neutral on EHTH at the moment. So Twilio had a breakdown this week. This is a stock that a couple of our clients and subscribers are short on at the moment. It's paying very, very well. Again, we know with downtrends, they work exactly the same as uptrends, where we have breakdowns, retests, fall away. That's the textbook movement of price. It's been in a huge sideways range for months. We've had a break of that direction, so my directional bias is bearish. So yeah, and unless Twilio proves me wrong and we have a failed breakdown, we do have to be bearish on Twilio at the moment. Chevron, again, this has been absolutely massive recently. It looks like we've found a bit of support here, at a logical level of support, dating back to 2016. So I think what you could probably anticipate here, and it's what we've seen, we've obviously seen a bit of a bounce here, but if I just plot something in, actually, we can see here that we have a bit of bullish divergence. Now, that doesn't mean the stock price is going to start, rallying hard to the upside. Obviously, the oil markets, energy are being hit massively with the issues that we're seeing there. But what we can anticipate with divergence is maybe just a short-term counter trend move. And I think what we have is we've got a bearish bias on Chevron. I'm not bullish on the stock at all. But what we can probably anticipate is a bit of a rally. And I think with that rally, it will probably offer opportunity to move to the downside. Because oil energy is obviously being beaten to death at the moment. XLF, I think we need to be very, very conscious of this level here. We had a late rally last week that saved this breakdown, but I think if we get a confirmed breakdown on a weekly candle below this level, then I think again you need to be looking at short opportunities in the financial sector. The Goldman Sachs, the JP Morgans, the Citi groups, they've all been battered to death recently, and if we get a breakdown below this level, then that's only going to get worse, in my opinion. CrowdStrike, again, after last week, we got a breakdown here as expected. We've got a rally. I think any rally in here, if the overall market continues on a bearish downtrend, you can expect a lot of the stocks within the market to resume bearish downtrends as well. And I think CrowdStrike would be one of those where I think it would be make a lot of sense to go short on that. So bearish call on CrowdStrike below $44. Talked about American Airlines, I touched on it, and again, I think we have to be bearish on airlines at the moment. So I think any rally, no matter how high any potential rally goes, I know we got one on Friday. I think we just look at that as an oversold bounce, but airlines are going to struggle badly. We're not going to see them all make it through this, in my opinion. Some airlines in the UK are already going bust, so it's only a matter of time before this hits the US, and I think American Airlines is one of those where you might want to consider shorting. Match Group, again, we've broken below here, so I think that's a stock that you can look to be bearish on, provided we're below these levels at $62. Wynn Resorts, this has been massive for one of our clients in particular this week. This is one that I also highlighted last week as a potential short. Again, I think any move to the upside here, I think it offers opportunity to get in and go short on the stock. So again, bearish call on Wynn Resorts. A couple of stocks that were requested from last week on our YouTube channel. KRMD, I think what I need to probably say just with these types of stocks is that obviously, very, very, very recent stocks, it's obviously had a massive move to the upside, recent IPO, and there's not a lot of structure to price at the moment. And honestly, I don't know a massive amount about the company. I'm assuming it's a medical type company, but yeah, I think it's one of those that you might want to just consider as a long-term investment. I don't see anything about the chart that makes me want to trade it technically. So yeah, the support levels, I've added a Fibonacci in here, but I think even with the Fibonacci, it's very, very ambiguous at best because there's not any structure or pattern developed yet. And that leads me on to LVGO. Again, looks like we're in a bit of a triangle pattern here, sideways range. Until we get a definitive move in either direction here, I wouldn't be looking to trade it. I think above this level makes a lot of sense, and below it, probably look to short it. But as I said at the start, guys, I'm going to share with you the performance and some hard statistics about how our trading community client base has done over the last few weeks. And I think for those of you out there that are maybe struggling a little bit, and maybe you are looking to, or you've maybe been on the fence about joining for whatever reason, then you'll get better insight from this information. But if you've enjoyed that, please do subscribe to our channel, bottom right hand corner there. We try to upload every week, and yeah, so let's get into it now. I'll come back to this. I think most of you probably want to just kind of see how things are and what's been going on here. Now, I think the one thing that I have to say as well, and I'm going to be touching on the negative side in just a couple of minutes, but this is one of our clients, Michael. He's finally made it to 6 figures on his account. He did this on Thursday during one of the worst stock market days in history. That's what kind of preparation does, and obviously well received. Everybody congratulating him. I screenshot this within seconds of it going out, and yeah, Michael's finally made it to 6 figures. He's put an incredible testimonial just up on my website today, and feel free to go and kind of check that out. The other side of that, Edwin, one of our subscribers, he's saved his 401k and obviously his trading account, $100,000, totally saved, got defensive, and that's another one. Again, one of the best days of their financial life. Again, it's during one of the worst days of the last decade. One of the best days of someone's financial life. Options, success stories, puts, This is what preparation does, guys. It's not that everybody can do this, and that's something that I need to kind of get over to you as well. And if you are, eagle-eyed, you'll notice here that, yeah, JP is one of our guys that again moved 2 weeks to 95% cash. But those of you that are eagle-eyed here will note my response to him just saying, unfortunately, there's 20% of the group that didn't get defensive. Now, I have around 150 clients and subscribers based all over the world, and when the stock market started plummeting during the week, I needed to know just how much everybody listened to me, because over the last few weeks, a lot of you that certainly follow my social media will understand that a few weeks ago I published my client only analysis for the first time ever, because I seen what was happening and I tried to help as many people as possible. And that was the question that it was just simply one question that I put to everybody, and I just wanted to keep it as simple as possible. Now, 20% of our clients didn't get defensive ahead of time. Now, I think the one thing that I've come to understand with this is that, certainly through reaching out to people, is that there's a big difference between technical trading and investing and straight up investing. And many of our clients and subscribers, although they obviously like the technical side, a lot of them gravitate back to the investing side, where they buy on significant discounts. And I understand that. I have got complete healthy respect for it. Obviously it's not my approach, but I do understand that certainly it's a positive that the 80% got defensive and were able to move to cash and obviously take advantage of a downswing, a downtrend in the market. I'm pretty proud of those numbers, because I don't see many other, I suppose, financial technical professionals sharing the actual insight into their work. And I think it's very important, because I see, again, when I go through YouTube and I see all these, let's air quote, gurus, etc., and they're all doing the same thing, and a lot of it's just buy the dip. And the reason why they do that is because it's something that works in bull markets, but there's always that one time where it doesn't work out and the market keeps dropping a lot further than you think. So it's not that I am able to predict crashes or corrections or any of that. This is the third time that I've done this, and it's about understanding when to get defensive ahead of time. And I think if you were to sit down and have a beer with most of our clients and subscribers, I think the one thing that they would probably all say is that my analysis is probably a good insurance policy, because I understand what the danger signals are on a technical level. And 80% getting defensive, I think that's a positive. But the type of person that I am, my heart breaks for the 20% that didn't get defensive, but I know that they're going to be okay in the long run, because the market does rebound, and I know that a lot of them have bought incredibly good companies. And also the other thing to say is that I'm not the only information that many subscribe to. So I'm very, very happy that 80% got defensive, because I know that 95% of the market lost a lot of money last week, and I've been able to help 80%. So if you see the value in that, and that's something that you would like to come on board with, it's very, very straightforward. We've got a few spots still left. You get 1 year access to our trading community, our group, our trade ideas. I'm sure many of you have seen this already. We're giving away access to our technical analysis program. Go and have a look and see how much that's changed everybody's lives, and the testimonials. And $500 a year, I think it's a complete no-brainer. But You know, I understand that it's a very difficult time for many of you. You know, the coronavirus, health, obviously number one priority. But if you are somebody that's going to be stuck in the house for the next few weeks, I think it's not a bad thing to maybe try and pick up this, you know, technical analysis nonsense and see if it can help you in some way. But go and check out our website, honeystocks.com. Those are the types of people that we can probably help if you are looking to learn the technical analysis thing and get away from day trading, and you know, maybe you've got a career or a business that you're trying to fit around, and maybe you want that insurance policy, you know, who knows. But I know what it's like losing from losses, guys, and I'm not here to tell anybody that, you know, it's all sunshine and rainbows out there. I know it's not, and you know, it's if you're out there and you're hurting, complete sympathy, guys. But it's just the market, unfortunately. So if you want to learn a new way, go and check us out. But thank you as always, and stay safe out there. Thank you very much.